right, here's October to November 3rd, end of October, beginning of November weekly recap. So I'm just gonna get rid of all the daily and let's take a look at what's going on, what was brewing in for the week. Pretty crazy, pretty crazy. So let's make this a little cleaner. And let's get rid of the Fibonacci's. So if you notice on the multi-day pivots, it's the multi-day, okay, on Saturdays, ATR pivots, which is used for the weekly. You see how these lines right here, this line, this line, this line, this line, that divides the day. So this is Monday, Tuesday, Wednesday, Thursday, Friday. And then you have, these are 30-minute candles with 4-hour candle overlays. These are 4 hours. So you see how on Monday we were consolidating, and then Tuesday, I mean, they're waiting for. I want to say they're waiting for the Feds. They were, but at the end of the day, they sort of knew what they were doing before the Fed even make an announcement. So let's go into what I would have done, or what I did for the week. And how you want to be looking at major key levels with technical analysis. So first and foremost, you want to look at the week before. What was the high of the week before? The week before, the high, you can see, this was Monday, Tuesday, Wednesday. So see, 1, 2, 3. So it's a triple top. So that's an area of concern, right? So you're playing a potential range of 700 points. See how it's the top, from the top to the bottom. So everything in the middle is considered range bound on a weekly. You're not breaking below or you're not breaking above just yet. So now what you want to do is you want to draw. So here, let's go ahead. So this is your low. This is your high. Think about it that way. So that's how you want to approach. Actually, you know what? Let's go ahead and just delete that. Make it easier. We'll just use this. This is your high, and this is your low. So there's your range. Anything in between, remember you're playing in the traffic, so you're in the middle. So this could have gone many different ways. Who knows? This could have definitely consolidated right here and then ended up breaking down just like it did here, but it didn't. And how, that's why you have to play the chart in the moment and know where things could possibly go. On Monday right here that this was an area of concern last week. See how this was support? They gapped it down, and then this was the zone, that 4-hour candle. So what did they do? They held that. The moment we broke above, now that is now support. So what do? We came on Wednesday and we broke above, and it could have done multiple different things. It could have retraced, came back down, and then gone back up, but it didn't. First half hour, it just kept on going. Second half hour at 9 o'clock, kept on going. Then remember, this was FOMC day, so a lot of times people think, oh, it's going to be low range. Not necessarily. You got to play the chart. Zero bias. So what do we do in the morning session? We basically consolidated underneath the mid-range pivot. So remember, this is the previous day close or previous week's close. The bear pivot, the bull pivot. Anything above it, you want to be bearish or bullish. Anything below it, bearish. So anything in between is chop. So the moment we broke above, you should be looking for the upside. Then when you're here, you should be looking for the downside until you break above. Well, FOMC is where we broke above. They actually brought it back down, faked people out, came back up, and that candle closed. You see at 1:30 Central Time, they closed it. So that means the last hour and a half, you're playing above the mid-range pivot. And so what did they end up doing? They ended up that last hour and a half, they went all the way up here. And I believe on this day, the intraday pivots, that was a full ATR range, right to the smack to the very end. So So again, we're playing on multi-day pivots. So you got to be thinking bigger time frames, 30-minute candles, 4 hours. Like, you have to see how these candles close. So what do you do the next day? Your plan would be, okay, well, we know that this is possible resistance, right? So, and you have a +1 ATR. But you see how this 4-hour candle closed pretty well above. So it could have done a couple different things. Could have opened up down here, which you would still would have gone long. It would have filled the gap and then potentially go up. If it ended up gapping up to right here, then you would actually look for the short, and then you possibly down here reversal, or the 4-hour candle comes all the way back down here. But the mere fact that we open not just above the ATR, but also above, you see how that one ATR is also above that resistance for last week, the high. So now that is support until proven otherwise. And so on Thursday, since we already had some big moves, you're basically range bound. The first morning session, that first 4-hour candle, we basically played in between this range, which would be the +1 ATR and the next range pivot. And then we broke above it, we held. The next day, we gapped above and then shot back up. This was your target for Friday. And sure enough, it found its way up, and then that was the morning session. In the afternoon session, it could not get above that. So it was a doozy, you know. And I mean, I also am reluctant to be showing the ATR like pivots, like not pivots, the SATI pivot ribbon, because it does help give a sense of the momentum on a trend, but it also can fake you out. So if you look at actually, I don't have it on that. Sometimes I do, but if I showed you on the daily, this is what the pivot ribbon looks like. You see how it opened strong, came back up, it held this trailing line, and then it just kept on trailing. The reason why I don't necessarily like this is because it is a lagging indicator, as in just because you see how the this ribbon, this cloud is going up at the moment of it's happening, all you're seeing is that it's above this, which is good, but it can easily fake you out and, like, you know, snap back below, right? But it does help you keep in a trend. You see how we basically went up, dipped back down, and then it just slowly kept trending. And so you would want to basically be buying into these dips if you were looking to go long. And so that's why it is helpful on trend days. If it's not trending, then it can be really detrimental because it can fake you out a lot. It gives you a little bit of whiplash. But that is not what I wanted to go into on the recap. So anyways, you see how everything's playing with, this was a very rare week, but it was also FOMC. The fact that we didn't just, I would assume that we probably would have stopped right here and then hovered right here, and then the next week make a decision, but they shot this thing up. So now looking forward, so let's look at remember what was the 2 weeks ago, what was an important support? It was right there. You see how it also is holding it right here. So going into next week, that is going to be a critical place. So keep that line, and as long as we stay above it, we have momentum to the upside. The other areas of interest would probably be right here. Actually, yeah, probably right here. You see how this was support, and now resistance. So we might play in the zone for a little while, maybe the beginning of next week. For all, I mean, what it could end up happening is I don't know what the ATR levels are for next week, but just remember that this would be your max pain for the week. Other than that, if you look at, let's say for instance, I was looking at, let's look at NQ on a on a daily, right? Okay, so you see how that was a pretty big recovery, but we're not out of the woodworks. Why? At least on NQ, what do we have? We have this trend, and it's proven itself multiple times. Right here, right here. So what could happen next week after that big move is they could end up consolidating in this range, just like they did here, for about a week or so before making a decision. And the next week after that is going to be your CPI report, and then we're going to start getting into the Thanksgiving. So what I'm assuming what may end up happening is we consolidate right there. I'm going to go ahead and delete this. So now looking at the bigger picture, you want to also draw major support. So this also was is it 14,680? That looks like, or 671. What was it over here? 14,671. Wow, miraculously, look at that. See, 1, 2. That was that really important area, even right here. So that was an important area that we broke above. So now I would look at that as on a daily. The reason why I picked that out is look at these wicks. See how it comes up? See how it's closing? See how it came back up, wick back up, and then now came back below. So what we could end up now happening is this. We could we could play into this area right here. Oh, that's a curve, but what I want to show you is what am I trying to do? Circle, ellipse, polygon. This could be at least until December. Who knows? Could be this area right here. That would be a failed breakdown, and then we consolidate until the end of the year, and then it makes a decision where possibly into next year or this year. As in, these are the core. I mean, look, even this line right here, that 152, that was an area of interest that I don't know why I had that there. I think there was a pivot or something, but we bounced right off that. But you see that we could end up coming back, consolidating here, and then breaking back down here. But this was a pretty violent move up, so they weren't messing around here. So I don't know if they're gonna have enough momentum to get it back above. We could open up, and then they could profit take next week, and we just end up coming. If we end up coming back out of here and holding for the week, not just to look above and fail, but if they hold up here next week, this could end up driving back up. But I don't know. I mean, look at this. I mean, that would be considered a consolidation pattern, right? And if that was the case, I would probably say it'd be from right here. This would be your 3,800 point move. This would be what you would have for going into next year. Consolidate, measured move, breakout. It'd be crazy to see us go into all-time highs, especially with interest rates exorbitantly high, and just how everything is, and the unpredictability with wars and other things. So, but who knows? At the end of the day, it's not your job. It's not your job to figure out what the market's going to do. It's just to play the probability of where certain support and resistance are, using that long-term data to help you with that intraday data. You could do really well, or you may know the direction, but have poor execution as a day trader. So anyways, that is what I'm looking for to next week, as in hopefully next week we get some kind of pullback, and we are in this zone for the next 2 weeks. But unless CPI comes back bad, I would say that we're going to probably do like we did, these other two weeks, we may consolidate up in this range right here. So look at that. See, let's see, it was 4. Let's see, this daily candle was 945. I mean, look at this. This is 3 straight days of the same size move candle, at least on a daily candle. So I would probably expect us to be 800 area. Yeah, so about, yep, I would say if next week this could be our range right back in this area, probably this area. Let's take a look. Yeah, polyline. This could be November. Yeah, right here. This would be possibly our range, right in here. But maybe not. Could end up. I mean, the likelihood of us like just cranking out. I mean, it's not like the Fed said that they were actually going to stop interest rates for good. They just said there's a possibility that by the end of the year they might have another one. So I think this was a short squeeze in a way, and I was expecting this. I was actually hoping this move was going to happen right here. Like I honestly, last week I didn't want this to happen. I wanted this to come back up here, and then this week it to consolidate in this area, and then sometime in the month of November, December, like dropping down. But it wanted to fill the zone. It wanted to fill that zone. So let's see what happens. For me, I'm going to be bullish if it's anywhere above here. I mean, we might hit the tip top for the week. We could end up, coming right down below. So anyways, that was the week review. It's all about compartmentalizing. It's all about trading probability. Do not get it. The market's doesn't have to do what you want it to do. Like this morning, it dropped a lot. 100 points up and then 100 points down, and this looked super bearish. I mean, let's look at the replay. If I had this candle right here and I took off let's take off that ribbon. That right there looked like it probably was pretty bearish, as in, oh no, Friday they're going to probably profit take, and they, but look, they did not hold that break, and so you have to be bullish. And if you were, the rest of the day you would have had a really good move. So, anyways, good luck next week. I won't be around. Just as a reminder, I'll be gone on vacation for the entire week. But hopefully this helped. Just review these little tidbit technical analysis and helpful hints and tips. There's other videos to help you with sort of the trading aspect, but this was just sort of to show you why something happened and how to play the pivots for the multi-day. All right, good luck.